Let's do it. Let's go over part 2 of Wall Street and the Federal Reserve. Story of telling you how 1987's problems, people, and actors are the same people, problems, and actors that have just spread out and hidden their corruption over the last 30, 40 years. Now, if you haven't seen part 1, I highly recommend going and looking at that first so you're not lost here. I'm going to go over this one, and again, I'll leave that link in the description below. And let's go ahead and take a look at part 2. So now that we know our characters from last time, plus a couple of extra, and we're going to go over a brand new one, a new person in this one, in part 2, because he plays a big role in this part. But we have Jamie Dimon and we have David Salomon of Goldman Sachs, who are both key players in a lot of the mergers that took place, and David Salomon actually used to work at Salomon Brothers. I did not cover him last time. He is a big player. He's one of the largest banks in the world, from Salomon, and his last name's Solomon. Just a coincidence there. But in this one, we're going to specifically look at where it all started with Warren Buffett and honorable at the time Jerome Powell, the lead investigator of the case, into Salomon Brothers and their scandal, the biggest scandal in Wall Street's history that was public back in 1989. And of course, the person who came in and cleaned up after Salomon and took over as CEO of the chair, and who was currently the largest stakeholder at the time, Warren Buffett. He came in, handled regulation of Salomon Brothers after the scandal, became chairman and interim CEO of the company, and again, was the largest stakeholder of Salomon at the time. Now, something else to keep a note of for later. The largest stakeholder of American Express at the time was also Warren Buffett. You need to remember that. So let's talk about this guy, July 9th, 1985. Who was that guy? That was Dean Witter. He agreed to lease WTC2, 24 floors of it, on July 9th, 1985. Now we're just going to leave it at that. YouTube's pretty bad about this stuff, so we're just going to leave it at that. He headquartered it. His company was headquartered there in 1985 until its merger with Morgan Stanley in 1997. Now, who was Dean Witter? Again, the headquarters were located in you-know-where, where the firm had occupied over 864,000 square feet since 1985. Dean Witter was one of many tenants whose offices were evacuated as a result of the 1993 bombing, which took place during the firm's spin-off from Sears. That's right, Sears. Simulation confirmed, right? Following the firm's merger with Morgan Stanley, the firm's headquarters would be moved to 1585 Broadway on the edge of New York's Times Square. Morgan Stanley's Dean Witter would still have a large presence, you know where, on September, you know what, 2001. Dean Witter was the first big brokerage company to get into the online trading business when it bought a small San Francisco-based outfit called Lombard Brokerage in 1996. One of the first big brokerage companies to get into the online trading business. So, how about that shit? Now, Morgan Stanley, who later had a joint venture with Citigroup to split Salomon Smith Barney, was basically Dean Witter Reynolds. So you had J.P. Morgan and Company, the House of Morgan, Dean Witter and Company, Reynolds Securities, J.P. Morgan and Co. became Morgan Stanley, Dean Witter and Co. Reynolds Securities became Dean Witter Reynolds, and Morgan Stanley, Dean Witter, J.P. Morgan, all of that merged in 1997, which would later become Morgan Stanley. Crazy shit. Now, a few years later, this is going to be around 1988, 1989, before the Salomon trial even took place. Salomon will move into you-know-where, but this time WTC-7, built by Larry Silverstein, on land owned by the Port Authority of New York and New Jersey, said yesterday, and this was again November 29th, 1988, that finding a major tenant had not been easy because the rent was high. He said Salomon would pay more than $1 billion over 20 years. We were waiting for a special tenant, and Salomon is it, he said. Nonetheless, others close to the transaction said Salomon drove a hard bargain with Mr. Silverstein, both because of the increased competition for tenants and its own needs to economize. Then we have another headline here that was a little bit later in February of the following year, 1989, commercial property, the Salomon solution. a building within a building at a cost of $200 million. Basically what they did, they took out entire floors of the building. This is all documented. They took out, I believe it was 5 floors, and they also installed diesel generators. Again, like it sounds, a building within a building. Now, since we know all of that information, now I want you to look at this clip of the trial that happened 2 years after all of these tenant spaces were already occupied by a lot of these entities. Go ahead and take a look. Okay, so this was the Salomon Brothers trial following the bond scandal that happened in 1989. The trial didn't take place until 1991. Again, you had Jerome Powell testifying. That's today's current Fed chair. You had Warren Buffett, who you see here on the screen. And you had the SEC chair at the time, I believe his name was Robert Mackey, was also there as well. I just want to show you a clip from Warren Buffett's testimony, just so you can see and look from this perspective as a giant cleanup operation. Because after this is done, I'm going to show you what took place before this trial even happened. So take a look.
His honest, low-key style, his respect for the rules and the proper role of government, and his keen financial mind will provide Salomon and the financial community reassurance and leadership. There is no more capable or honest person in the country to assume this challenge. It's an important job at a critical time in our nation's history. The country simply will not benefit from the destruction of a company employing 8,000 people for the misdeeds of a few.
So they're basically saying that they're not gonna prevent Salomon from conducting business anymore because 8,000 people would lose their jobs. So just think about what just happened with COVID. At the time, that was their cop-out, was 8,000 employees at the time. They couldn't, lay them all off because of the actions of a few. They can go get other jobs. I'm sorry, but anyways, let's go on.
Instead, those few need to be punished and the company reformed and set straight.
It was reformed, but no one was punished. And the way it reformed was the most, it's a story. That's what we're going through right now. Multi-part story.
Nebraska is being sent in to help Wall Street in this effort. And those of us in Omaha are very proud of the man that has been chosen for this job. Warren?
Thank you very much. Thank you, Mr. Buffett, whenever you feel comfortable, pull up to that microphone and please begin.
Mine. Is this, it's working?
Yes.
Chairman, I thank you for the opportunity to appear before this subcommittee. I would like to start by apologizing for the acts that have brought us here. The nation has a right to expect its rules and laws to be obeyed, and at Salomon, certain of these were broken. Almost all of Salomon's 8,000 employees regret this as deeply as I do, and I apologize on their behalf as well as mine. My job is to deal with both the past and the future. The past actions of Salomon are presently causing our 8,000 employees and their families to bear a stain. Virtually all of these employees are hardworking, able, and honest. I want to find out exactly what happened in the past so that this stain is borne by the guilty few and removed from the innocent. To help do this, I promise to you, Mr. Chairman, and to the American people, Salomon's wholehearted cooperation with all authorities. These authorities have the power of subpoena, the ability to immunize witnesses, and the power to prosecute for perjury. Our internal investigation has not had these tools. We welcome their use. As to the future, the submission to this subcommittee details actions that I believe will make Salomon the leader within the financial services industry in controls and compliance procedures. But in the end, a spirit about compliance is as important or more so than words about compliance. I want the right words and I want the full range of internal controls. But I also have asked every Salomon employee to be his or her own compliance officer.
And that's the problem. Be their own compliance officer. If you're going to look at this whole trial, I'll link the description below, or I'll put the link in the description below. Basically, it's a big pony show. He comes in, he says, I promised you, I promised American people, we do this and that. We'd clean up Salomon Brothers. They'd be the leading example of compliance in the industry. And then at the same time, all of the actual real criminals that are sneaking out the back door are doing just that and spreading out throughout the financial industry and in and of itself, which we'll see later on. But basically, it's just a big pony show. All the same thing we have going on today. Media comes on, news comes on, TV comes on, just to get us to perceive something in a different way. By the way, I already showed you what happened before the trial, so just to reiterate before we move on. Before the trial, you had everyone, like in Salomon, they were already renovating WTC7. They were already taking floors out, putting diesel generators in. You already had Dean Witter, who had moved into WTC2 as well, one of the biggest firms at the time, and one of the first big firm for online trading. So keep all that in mind. And now look. So this is the 1993 annual report from the SEC. Look at the address that's listed at the top left. So that means directly following this investigation, they moved in as well with the people that they were just undergoing a trial against. Now, what's interesting is that at the time, they weren't listed as what I'm about to show you because they hadn't merged yet or been picked up at this point in time. But basically, the SEC chair and Salomon Brothers were sharing space in the same building 2 years later. Now, that same year, a bomb placed by a terrorist exploded in the basement of the WTC Center, disrupting futures trading in New York and causing the temporary relocation of the CFTC's New York office. So just think about that. The CFTC, Commodities Futures Trading Commission, had to relocate their office because of this. Now, look at the tenants in World Trade Center 7, I said it, crap, by the merger of Salomon, Smith Barney, and Citigroup in 1998. So tell me this, why would the largest owner of this company, who was involved in the trial, the CIA and the Department of Defense, with the culprits, all be in the same building together, with the Securities and Exchange Commission, with Standard Chartered Bank? Because they're covering something up. They have to be.